Alright, hi everyone. Welcome to today's Sunday pre-market analysis. And I see some of you tuning in have already started dropping your messages. Just hi Hito. Alright, good morning, good afternoon, good evening, wherever you're from. Hi Boss Chan, I hope I got that right. Alright, just want to make sure you guys can see me and hear me loud and clear as well. Could I just have a quick maybe comment in the chat if you can, if the audio is good? Right, hi, okay. My name is Keaton, and I'll be handling the pre-market analysis today as Desmond's on holiday. Right, I hope you've all had a good weekend so far. And just wait for more people to start tuning in, and then we can start things off pretty soon. Just want to make sure audio is good. Yeah, video looks good. I believe audio should be loud and clear as well. Right, okay. Boss Chat has a question as well for gold, US 30, euro. Yep, we'll be looking at all this as well. We've had quite a fair bit of news over the weekend as well with regards to US debt ceiling talks. The negotiations broke down on Friday, and I think negotiations might be going to resume today when Biden comes back to America. All right, hi, good evening, Kwabi from South Africa. Hi, nice to see you. Okay, live chat's doing good. All right, okay, so I hope you guys had a good weekend. A lot of things going on over the weekend as well. If you're a big football fan, with regards to Premier League, right? Man City winning their third title in a row, I believe, right? Yeah. Arsenal losing their match, losing on Saturday against Forest. They were top of the league for quite a while, and then suddenly, they apparently they couldn't handle the pressure right at the end. Not clear, louder. All right, is audio better now, Kwame? Is it a bit better now? All right. Okay. Awesome. Okay. I'll just get a little closer to the mic. Maybe I was just sitting a uh, little too far from it. Right. Okay. We got people coming in. All right. It's 4 a.m. All right. Let's start things off, shall we? Okay. Right. That's okay. So as I've said, this morning's or today's analysis, pre-market analysis, will be hosted by me, Ketan Ramachandra. Desmond's on leave. Well, on holiday. Sorry, he's gone for a holiday today. He's actually flying to Melbourne. Yep. So, uh, so I'll be handling today's session, and yeah, let's just start off with as usual, with the disclaimer first, right? So this is a marketing communication. It does not contain or should not be construed as containing investment advice or investment recommendation, right? But the analysis here or the information here presented here does not constitute personal recommendation or consider your personal investment objectives, and it's purely for information and educational purposes. And also, please do note of the risk warning that comes with CFDs. They are complex instruments that come with high risk of losing money rapidly due to leverage. All right. Okay, so just a quick agenda. You guys know it's the same. It'll be the same flow as what Desmond runs as well. So we'll just start off perhaps with the key news events, and followed by the analysis on the majors, and also of course the custom requests as well. So just to cover the quick review of some of the questions that have come in on the live chat. So we have Hito asking about pound yen. It's from Lima as well. All right. Okay. Hi. All right. So pound yen. So we've got a good range of geographical background for today's viewers, live viewers. All right. Great. Okay. So we'll cover pound yen. We'll look at gold, US 30, and the euro as well. All right. All right. Hi. Okay. And then of course we'll have the custom requests for any other instruments such as oil or any of the other forex pairs or US indices or European indices as well. Okay, so as I've said, today I'm your host for today. My name is Ketan Ramachandra. So I'm an external analyst for IC markets. So as you may know, I'm as with Desmond as well. So uh, we are from Everest Fortune Group where we partner IC markets to deliver this pre-market analysis to you every week. So we've been the finalists for FX and equity research in 2019, 2020, and 2021. Okay, so for me, I'm more focused. Well, I do both technical and fundamental analysis. I tend to be a little bit more on the fundamental side, but I do use, of course, we still use technical analysis as a gatekeeping process because sometimes the fundamentals may be right, but timings could be off. So this is where technicals help us as traders to as a gatekeeping process, right? It prevents us from perhaps getting in too early into a market or too late. And also similarly on the other side, it probably helps us to time our exits slightly better, right? We might get a better opportunity to enter and exit. So that's how I like to uh, approach my trading. So I use a combination of both fundamental analysis and technical analysis. All right, so let's just switch now to the economic calendar. Okay, so you guys should be looking at the economic calendar for this week. So of course we like Forex Factory. That's a good economic calendar that we can all use. So right now, just to highlight, I'm on GMT time. So I'm on UTC plus zero basically, right? So just to refresh everything, yep, I am on GMT time, UTC plus zero. And I'm just going to filter the calendar from last Friday because we had on the 19th of May, Friday, we did have a pretty key event taking place. We had three FOMC members speaking, right? Okay, it's not covered here because I've only put in the top two, but we also had the two governors who were speaking earlier prior to Chairman Powell taking the stage at 3 p.m. GMT time. Okay, I think we can cover. Okay, maybe since we're on the calendar, let's just see what's coming up for this week. Monday is a relatively quiet day in terms of really high impact economic events, but we've also got uh, PMI data coming out of Europe and the UK. So the flash manufacturing data and services PMI data would tell us the state of the economy or the state of the manufacturing sector and the services sector for the respective countries and for the EU as a whole. We'll also get some insights into uh, inflation in these two sectors as well, whether inflation is holding steady or rising. So the good thing about the PMI reports as well is if you delve a little deeper into the main report, like for example, a main Eurozone report for services and manufacturing PMIs, you are able to get some insights regarding the level of inflation in the manufacturing and services sector for the EU, the UK, and perhaps the big European countries such as Germany, or the big economies, right? The big European economies, especially like Germany, France, Spain, Italy. Okay, and then on Wednesday, 24th of May, We've got the Reserve Bank of New Zealand releasing their monetary policy statement, so they'll be updating their official cash rate. So the cash rate currently stands at 5.25%, and the forecast for them is to raise interest rates by 25 basis points to bring it up to 5.5%. So this would be a major um, economic event to look out for at 2 a.m. GMT on Wednesday, 24th of May. You can expect the Kiwi dollar to have significant moves around this period going into and out of this economic event. Okay. Then we'll also have the press conference followed on by the press conference at 3 a.m. where the governor, who's the governor for Reserve Bank of, oh yeah, it is, oh, it doesn't say his name, I forgot what his name was. Okay, well, main thing to look out for is his press conference as well, whether his remarks uh, are construed to be or interpreted to be as hawkish or maybe as more neutral, which will definitely drive the direction of the Kiwi dollar. And then later on at 6 a.m., we have big inflation data coming out of the UK as well. CPI data will be dropping at 6 a.m. On Wednesday, 24th of May. And we've got, of course, the governor, Bank of England Governor Andrew Bailey speaking at 9:30 a.m. and then again at 1 p.m. on the same day. So, of course, we can expect some moves or some impact to see some impact on cable as well, right? Pound yen, we should expect to see some significant moves in pound. And then we have also Treasury Secretary Janet Yellen speaking as well. There's a lot of talks of U.S. debt ceiling, right? The negotiations broke down on Friday, and then now Joe Biden should be back or is already on his way. Should be back in the United States or should be on his way back to take part in the negotiations directly with the Republicans, right? We have McCarthy, who is the House Speaker, and yeah, so negotiations broke down on Friday, which is why we saw probably equities pulling back a little bit towards the end, and also a lot of today's early morning news or headlines that I'm seeing is surrounding the debt ceiling negotiations again. And then we have FOMC meetings the minutes of the FOMC meetings to be released at 6 p.m. on 24th. So this was meetings for the minutes for the policy meetings that took place on um, in June for May's meeting, right? Okay, and then just to quickly go down, we have Thursday, 25th May. We'll be looking at preliminary GDP numbers out of the US, followed by unemployment claims. And then we also have Tokyo core CPI coming up on Thursday. And then on Friday is probably one of the biggest uh, economic events out of the US. We have uh, we have both core and headline PCE price index. So this is personal consumption expenditures price index. So this is an inflation uh, data point, and this is the PCE price index is actually the preferred gauge of inflation by the Federal Reserve. So Chairman Powell and his committee members will be keeping a close eye on this data point for both core and headline PCE. All right. Okay. So just before we go into the charts, just to take note, last Friday as well at 3 p.m., Federal Chairman Powell had a speech, right? And then he was just to see some of the quick headlines. So he started speaking at 3 p.m. GMT, and this is at the same time when we saw the dollar started to sell off pretty sharply. Then, of course, if you see the US dollar selling off, DXY started tumbling. We saw the euro gain, we saw cable gain. Naturally, we saw dollar yen fall as well. And also, as US dollar falls, bond yields fall, we also saw gold rebound as well. So if you take note of this timing for this particular event, and when we go back to look at the charts very shortly, we'll be able to see how his speech had impacted the markets. All right, we see more people coming on. Hi, everyone. All right, great to see you guys. All right, okay. Just for anyone who's joining us, yes, my name is Keaton. I'll be handling the pre-market analysis today as Desmond's traveling. He's going on a holiday to Melbourne, so we wish him well this week. He's going to have some fun time with the kangaroos and koalas, and probably have some nice, uh, great fresh food from Australia as well. Plenty of lamb, plenty of sheep over there. So you can expect great cheese and fresh meat as well. All right, so just quickly to go back. So basically, some of the headlines that were coming out on Friday with regards to Powell's speech was, as you can see here, he says that the risk is more balanced, and the June policy meeting they're still unclear about whether they're going to raise interest rates by 25 basis points, or are they going to keep keep the rates on hold. And also there's also he's also saying rates may not need to rise as much as expected to curb inflation. But all those, of course, they've always been data dependent. So it all depends on how the incoming inflation data appears. So like I said, the PCE data coming up on Friday would give us a good insight into the level of headline PC inflation and core. The headline inflation has been dropping very sharply, so that's been good. And core seems to be an issue for many countries, not only for the United States, but for Europe as well. If you look at all the major economies in Europe, the core inflation is not retreating as sharply as the headline has done. And this seems to be a concern for a lot of central banks. So now it appears that they have shifted their focus to the core readings. And if this stays sticky, or what do they mean by sticky? If this stays elevated and is not pulling back as sharply as the headline figure, then it's quite likely central banks may keep rates higher for longer rather than cutting them. There's a lot of expectations for rate cuts to come in the second half of this year. But if the economy stays strong, we see a relatively strong economic growth, and but we see inflation, especially at the core reading, not pulling back as quickly as we like. I think rate cuts are not going to materialize. Okay, so you can see Chairman Powell was relatively uh, balanced, I would say. He wasn't as hawkish as expected, so I think that is one of the reasons why we started to see the dollar sell off in on Friday at 3 p.m. GMT. So just quickly to go, I have this website called CME Fed Watch Tool. So if you were to type this into Google, CME Fed Watch Tool, right? If you Google that, the first link, we will see this CME Fed Watch Tool. So this is generally a good tool that I like to use this to get a gauge of what the Federal Reserve is going to do at their upcoming meeting. So the next meeting, FOMC meeting for June, uh, is coming up in 33 days. So basically, towards the end of June is the next meeting, and this is uh they update this chart, I believe, every week, or maybe there's a higher frequency, a shorter time interval as well. But I think they do update it every week or maybe every day. So this just quickly tells us what are the probabilities of what gives us the probabilities of what the Federal Reserve is going to do. So the target rate for the fourth meeting on 14th June. So current rates are 500 to 525. So just take note, these figures are in basis points. So what does that mean? Anytime you see any number that's quoted in basis points, you just have to divide it by 100 to get the percentage level, right? So 500 to 525 basis points is basically 5 to 5.25%. So when they say they're going to raise interest rates by 25 basis points or 50 basis points, you just take that figure divided by 100. So it just means that they are going to increase by 0.25% or 0.5%. All right, hi, we've got more people coming in as well, right? All right, good day, good morning, good evening, all right? Jamilu, Christy, all right, welcome everyone. Okay, so just to take note, so as of now, there's an 81% probability that the Federal Reserve will keep interest rates on hold for the June meeting, and there is an 18% probability that they will raise interest rates at 25 by 25 basis points. So as you can see in the latest headlines, with his speech on Friday, Jerome Powell was relatively balanced. So hence, this is why we are seeing a higher probability for the Federal Reserve to keep interest rates steady. So just take note of this website. Just remember, if you type CME Fed Watch tool, you will be able to come to this website. Yeah. All right. So let's just go into uh, the charts. Okay. So DXY. So now I'm on the daily time frame for the dollar index chart. All right. All right. Hi, Marius. All right. A lot of people tuning in today. All right. Thank you very much. Okay, so as I mentioned on Friday, 3 p.m. GMT, Chairman Powell was talking, and we saw a pullback in the dollar index, which naturally drove uh, the direction for euro, cable, dollar yen, and also for the price of gold. So let's just uh, quickly just zoom in into the 30-minute time frame just to get an idea of what actually happened, right? Okay, so I'm on GMT time. My chart's also on GMT time. So as you can see on this candle here, okay, I'm going to take a, all right, so this is why I'm highlighting my crosshairs on the candle at 1500 hours, so 3 p.m. GMT on Friday, 19 May. So as you can see, when Powell took the stage at his conference, I believe a press conference or a panel discussion, and where he came out to be as fairly balanced and wasn't overly hawkish. You could see the U.S. dollar selling off pretty sharply, which is what drove the value of the dollar index down. Okay, just a quick note on what the dollar index is. Yeah, it is a measure of the value of the US dollar versus a basket of currencies, right? So in this basket, the dollar, which is the dollar index, it is made up of the euro, the Japanese yen, British pound, uh, Swedish krona, Canadian dollar, and of course Swiss francs. Okay, but just to understand the composition of the basket, it's not an equal weighted basket. The euro actually makes up 57% of this basket, followed by the Japanese yen, which makes up 13%. So basically, the euro and the yen have a combined weightage of nearly 70%, 70, for this basket. So what this means is, if you see the euro dollar uh, 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 moving higher, and you see dollar yen dropping sharply, significantly, this means that the euro is in high demand, as well as the Japanese yen. Right? So when you see these moves, so naturally, because these currencies make up the underlying basket of the dollar index, so naturally the dollar index will fall rapidly as well. So do take note that the euro makes up 57% of the dollar index, and the Japanese yen makes up 13% to give us a total of 70%. So if you see the euro being bought very aggressively, then it's very likely that the dollar index will fall. And conversely, if you see the euro dollar being sold very aggressively, we can expect the dollar index to rise very rapidly as well. Okay, so was what was happening on Friday, 3 p.m. GMT, where markets interpreted Jerome Powell's words or remarks as being balanced and not overly hawkish. So that's why we saw the US dollar sell off aggressively, pulling down dollar index, and which is what you will see in the euro as well. So conversely, euro USD, right over here, we will see the euro shoot up as well. So the euro shot up from about 1.080 to as high as about 1.030. So it jumped nearly 50 pips on at that time as well, at that point in time, right? So similarly, if we were to look at the pound as well, we would expect a jump in the pound as well. So this is how being aware of key economic events, especially speeches by um, Fed Chairman Jerome Powell or ECB President Christine Lagarde can have major impact on currency markets, right? So it's important to take note of these events, and then we can adjust our trades accordingly, right? For example, if you're already in maybe long or short euro prior to this, you will have taken. It'd be good to take note of such economic events and to position and to adjust your trade accordingly. And also, you could also be prepared to see how the currency markets react once the news hits the wires, so that you could quickly put on a position as well. Generally, when it comes to news, I do not like to trade the news immediately, in the sense where I don't put on a trade maybe just 5 to 10 minutes before key economic event. If I'm already in the trade, maybe like 1 or 2 hours from the day before, then I'll leave it on and I'll adjust my levels accordingly. But I generally don't like to put on a trade just immediately, just prior to a news event uh, dropping. So generally, I would wait for that news to be released and just quickly understand that data point, and then probably uh, initiate a position. So similarly, if we were to look at dollar yen as well, yep, we can see that big drop in dollar yen as well. And then when we go down to gold, we will see the big rebound in the price of gold, right? Going from about 1957 to going to as high as 1984. Right. Okay. So now we know what happened on Friday. So how can we position ourselves for today, right, or for this week? So let's just go back um, to the daily time frame. Okay. So right. Okay. Let's just start off the analysis with the dollar index. Okay. So now I'm back on the daily time frame for the dollar index. All right. Okay. Uh, so the last 2 weeks, we've seen a lot of strong demand for US dollar. Okay, just to give a quick background, so as you can see here in this period, right, the last 2 weeks we've seen a really strong demand for US dollars, which is what is driving up the dollar index. Okay, now why this has happened is because, as I've mentioned earlier, core inflation is not falling as quickly as central bankers would like. And also, inflation expectations data coming out of the US have shown an increase in this data point. So, inflation expectation uh, figures are measured like on a weekly basis. So, we see them more regularly than CPI data or PCE data. And the recent data came from the University of Michigan Consumer Sentiment Survey, where the segment on inflation expectations actually increased to 4.6% as well. So inflation expectations had been retreating quite sharply over the last few months, but for the month of March and April, they actually jumped higher. So they jumped to 4.6% in March and 4.5% in April. So with inflation expectations picking up, markets have sort of digested this information, along with core inflation being very sticky, has digested both these pieces of information that central banks, especially Jerome Powell and FOMC, Federal Reserve, sorry, are not going to start cutting rates so soon. So, this is why we've seen this pickup in the dollar index. And if you were to look just quickly on the weekly chart, you just zoom in here. So the last time we saw a big move this year in the value of the dollar index was from the end of January all the way till uh, the end of March. So over a period of 4 weeks, as you can see here, over a period of 4 weeks, we had a strong rebound in the value of the US dollar, which was driving the dollar index. Now, is the same thing going to happen again? We are not so sure. Markets seem to be pricing in a lot of inflation concerns again. But we also saw that Federal Reserve was relatively, Chairman Jerome Powell was relatively balanced on Friday, right? So just something to take note on the slightly longer time frame that we did see the dollar index rebound very strongly over a period of 4 weeks in February. So basically, the whole of February, we saw the dollar index bounce, although it was pretty volatile on the week of 30th of Jan and also on the week of 13th of February. But otherwise, it was relatively clean moves to the upside. So this was a period where we would have been shorting the euro, shorting the pound, going long dollar yen, and would have been looking to short gold as well. So this is something to just take note on a slightly higher time frame. To take note that perhaps if dollar has rebounded strongly over the last 2 weeks, and it could continue uh, this week again. Okay, so let me just come back into the daily time frame. Sorry. Okay, so I'm just gonna. Okay, just let me just clean up a few things. Right. Hi. Okay, I have seen for okay new viewers coming in. Okay, so let's just quickly get onto the technicals, right? Okay, so today, let's see, Friday. Let me just quickly market should. Okay, so some of the resistance levels to take note of for this week. Okay, so last week, uh, dollar index went as high as 103.50, right? Okay, so it hit that first resistance, and it's been pulling, and it started pulling back on Friday after Jerome Powell was relatively balanced. So do take note that the first resistance level is at 103.43, and this is a level to look out for this week especially, because if we do see strong demand for the US dollar again this week, then it is very likely we should see this price break through this level, and we should go higher. As you can see, there's also an ascending trend line as well here. We also have an ascending trend line. So if the dollar really is in strong demand, we will expect it to see it break through 103.43 as the immediate overhead resistance, and we also expect it to break through this ascending trend line as well. Similarly, on the downside, what was previously a resistance level from mid-April till mid-May, right? We had a period of 4 weeks where where the level of 102.48 served as a level of resistance. You can see dollar index just ranging between the first support and this intermediate level here before it finally broke out. So our first intermediate support would be at 102.48, and the first major support should be 100.90. Okay, so if you see, just let me quickly check something if there's any new news headlines. Basically, I think today's news would probably be just on debt ceiling talks again with Biden coming back to the US. So I think just do take note of any debt ceiling headlines, because they may have an impact on the currency markets and commodities as well. Okay, so okay, so you can also see on this uh, downward leg, we've done the Fibonacci retracement here on this downward leg of the move. So we can see that the first resistance is sitting at 50%. Okay, it has already hit it, and it's tested this level. So the significance of the 50% is probably slightly diminished now, as it was already tested last week. But good to keep it on here to give us an idea of where we are in terms of retracement levels, and whether could this level uh, serve as an important uh, or significant resistance as we kick off today's this week's trading. Okay, so my only concern with the value of the dollar is we may see it continue to go higher. So take note of these resistance levels and this ascending trend line, because especially if the inflation concerns do not recede, do not uh, do not become less, right? If central bankers continue to see core inflation as a major concern, we could see uh, the demand for US dollars continue, and that is why we could see the dollar index pull back. But the other on the flip side is Chairman Powell was relatively balanced on Friday, so let's just see how all the how they markets digest these two bits of information. And also we have the debt ceiling negotiations coming up as well. So please take note of the some of the resistance and support levels that we have identified for the dollar index. Okay, so similarly, let's just go back to the euro. Okay, just let me quickly get rid of this. Right. So similarly, for the euro, right, if we look out on the weekly chart as well, back in yeah, there. See from January, end of January. Let's just zoom in a little bit. Yep, we got a weekly time frame. So from similarly from January all the way till towards the end of Feb, we saw the euro dollar going from as high as 1.1030 to as low as 1.050. Right. So it lost almost 80 pips, right? Yeah, it lost almost 80 pips during that period. So this would have been a period where we saw a significant clean move to the downside. So we would have been looking at opportunities to short the euro. Similarly, the last 2 weeks, especially the first on the week of 8th of May, we saw a big move down in the euro. And last week, the move could have been extended as well, but because I think on Friday Chairman Powell was relatively balanced, so which is why we saw the euro rebound slightly higher as well. Okay, so just take note on the larger time frame that there's a possibility that if this first support doesn't hold, then it's very likely that the euro is going to fall lower and drift towards the second support, right? So there are many keys resistance and support levels for the dollar index and for the euro. So now let's just go back to the daily time frame and zoom in just a little bit here. Okay. Right. So as you can see, again on this Fibonacci retracement, we've done a Fibonacci retracement from this is the 50%. Right, so this 50% now you could say is probably invalidated because it's tested the level and it's bounced up, but we're just going to keep it on for now to see exactly whether does this really hold as a support for the euro, and we may see the euro bounce up from here. And do take note what was previously a supporting ascending line, a support, right? We had an ascending trend line here, which was acting as a support. It has broken through this support. The euro has also breached the first horizontal support as well. And if we do see a real rebound to take place, then we would expect, of course, the first instance for the euro to clearly bounce off the first support level here at 1.0789 and to also move above this now previous supporting trend line. Right now, this supporting trend line, previous supporting trend line would now act as the uh, ascending as a resistance level. Right. So if we do see maybe on Monday today, we may see a bounce in the value of. I mean, we may see the US dollar continue to sell off, so hence euro could continue to bounce as well. So similarly for pound, So let's just zoom in a little bit. So once again, you can clearly see the moves to the downside here in January to February. Okay, so just let me clean this out. Okay. Okay, so first support at for pound yen is at 1.2422. As you can see, it is not only pound dollar is not only testing the first horizontal support, but it's also testing the ascending trend line as well. So we have two major support levels here, and if we can see price bounce off convincingly to move higher, then we could say the sell off, the demand for dollar has significantly reduced, and we are now seeing uh, all the other currencies react positively, or well, the euro and the cable gaining strength versus the dollar. And let's look at dollar yen. Okay, the thing also about dollar yen is the dollar yen, Japanese yen also serves as a safe haven currency, sorry. So when you have periods of high volatility, or when you can see US debt ceiling negotiations breaking down, that is when we are also likely to see a strong demand for the Japanese yen. So what this means is we would expect the dollar yen to pull back pretty significantly as well, right? So when we had the regional banking crisis in the US running in March, right? We had Silicon Valley Bank running into issues, First Signature Bank, and which started affecting the rest of uh, the their peers in that sector. You could see dollar yen pull back as well pretty sharply in this period. So when we have periods of high volatility together with uh, banking crisis or US debt ceiling negotiations breaking down, then it's quite likely we will see a strong demand for the Japanese yen, which means that dollar yen would be uh, pulling back as well. So right, so you can look at, for example, the S&P 500 VIX and the S&P 500 equity index. So when you see the indexes pulling back and we see the VIX rising, then of course it means volatility is creeping in or is coming back into markets. And this is a period where it is quite like, or more often than not, dollar yen should be pulling back as well. So by being aware of what is happening in the equity markets, what is happening at with regards to when the banking crisis was taking center stage, and now we have the debt ceiling talks taking center stage. So any breakdown in the negotiations for the US debt ceiling is going to be very volatile for markets. We are likely to see equity markets pull back, so we would see the US 500 pulling back. We would see the VIX rising, and generally we would also see uh, you dollar yen pulling back as well. So dollar yen has been making a very strong move to the upside since April, right? Once the banking issues had somewhat stabilized and it seemed contained, and it seemed that regulators uh, had sort of contained and brought a resolution to the crisis. You could see dollar yen picking up in strength as well. So as volatility uh, escaped from the market, we saw equity markets pull back to bounce higher, and we also saw the dollar yen heading higher as well. So just some general uh, themes or to be aware of, so that can help us uh, to identify direction for dollar yen. Okay. So when we look at dollar yen here, just let me bring the chart, make it more central. Okay, so we see on this big down leg move that we had, because here we had the BOJ, Bank of Japan, announcing a big intervention measures in the currency markets. because the yen was getting significantly devalued, going to as high as 152, right? Dollar yen hit as high as 152 in October. And in an inflationary environment, when your value of your currency loses or is devaluing significantly, your imports become more expensive. So the Bank of Japan had to intervene uh, by uh, by executing an intervention measure, and they did this by selling their foreign reserves. Right, Japan, along with China, are some of the biggest holders of U.S. Treasuries and U.S. dollars as part of their foreign reserves. So Japan, the Bank of Japan, was selling their foreign reserves and then buying back the yen in the open market. So this is why we saw dollar yen pull back very significantly from October of last year till early this year as well. So we had this big downward decline in dollar yen because the Bank of Japan came out with an intervention order to sell their foreign reserves, which meant they were probably selling US dollars and a combination of US dollars and probably their treasury holdings. And with those proceeds, they were buying back the Japanese yen in the open market, which is why we saw the dollar yen pull back significantly. So when we do the Fibonacci retracement on this downward leg, we can see that uh, the levels of 50%, the Fibonacci retracement levels of 50% and 61.8% are serving as significant resistance levels for the future. So you can see recently dollar yen has come up very close to the first resistance level of 138.94, and price has retreated from this level. So you can see how Fibonacci retracement levels can identify potential significant or support areas as well. And also combined with the fact that Chairman Powell was relatively balance on Friday, which is why we saw dollar yen pull back together, pull back down as well. So for an intermediate support level, do take note that 137.29 would be the first immediate support level, as because this was previously a resistance back in early March. It was also a resistance back in early May, and finally last week dollar yen broke through this resistance to run towards the first major resistance at 138.94, which is also close to the 50% Fibonacci retracement. And now price has pulled back and is sitting just above this first support. So if US debt ceiling negotiations sour and we see a stalemate, that means we don't see that the Democrats and Republicans coming to agreeing to a deal, that is very likely we will see volatility creep back into the market with US equity markets pulling back, which would also cause the other major indices in Europe and probably Asia to follow suit. And we also would see dollar yen pull back down as well. Okay, so do take note that the support levels for the intermediate support level for dollar yen, and we also still have this nice valid ascending trend line here, and we still have this nice ascending trend line still going up, which is sort of lining up nicely with the first support at 135.30. Okay, and then just to quickly go on to gold, and then we'll move on to the request. Right, we've had requests for uh, pound yen, gold, US. So okay, since I'm going on to uh, gold. Okay, so Bastian, I hope I'm pronouncing your name right. You had a question for euro as well. So basically, yeah. So just before we go into gold, do take note of the current resistance and support levels. The euro is sitting at a relatively strong support level of 1.0790, and if we were to see the dollar continue to sell off, we could see it rebound from this level. And if the move was really to be a sustained move, it would need to break above what was previously a support, um, ascending support trend line. Okay, so now looking back at gold, going back to gold. Okay, so just naturally right? When we see the value of the US dollar falling, we see bond yields falling. This creates an environment where it creates a tailwind for the price of gold, right? So when you see the US dollar falling, which means dollar index is dropping in value, we see US governments, and if you also see US government bond yields dropping, like the US 10-year yield dropping, this provides a very strong tailwind for gold prices. And conversely, if you see the value of the dollar index rising, you see bond yields rising, the combination of these two is very negative for the price of gold, right? And before we just go into slight details, I'd just like to zoom out on a slightly higher time frame to show why this level of 2050 to 2070 has been acting as a significant support resistance levels in the past, right? So if we just quickly first zoom out onto the monthly charts. Okay, so now I'm on the monthly chart, right? So we are currently trading around all-time highs in the price of gold. Okay, you can see gold back in September hit 1,900, so $1,900 an ounce. Okay, and then after that, back in August of 2020, gold hit went past 2070, went past 2070 mark, but actually and then it pulled back and started retreating as well. Okay, and then in April this year, when we had the regional banking crisis, right, and then we saw a big demand for gold. uh, we saw gold prices hit 2070 again, and before pulling back sharply. And similarly, over the last 2 months, in early April and early May, we have seen gold prices come very close to 2050 to 2070 again, and both times it got rejected. So what this should be telling us is that this region, right, this price region of 2050 to 2070 is a significant resistance level. So we are seeing a lot of sellers come into the market whenever gold has hit this level. So do take note of that, right? So anytime we see, if gold were to rebound from current levels and to head higher, do take note that the region of 2050 to 2070 is a significant resistance barrier, and we are seeing a lot of sellers come into the market at this price region. So do take note of that. So it's happened in August of 2020. It happened in March 2022, and also happened earlier. Sorry, this is March 22, and it also happened earlier this year in uh, March and April, where we had the banking crisis in April. Sorry, March was here. This is sorry, I thought this was 22, but 23, but this is actually 22. But this was for uh, this was when Russia invaded Ukraine, right? So we had a major geopolitical event in March of 20 February 20 February 2022, and we saw gold prices rise rapidly on this geopolitical event, going to as high as 2070 before pulling back. Okay, so just to take note of these levels, and then just to zoom back onto the weekly chart before we go back onto the daily chart. So also just to take note, so just let me clean this up a bit. Okay, so we had a major geopolitical event take place back in March of 2022, and we would expect naturally we would think gold prices to remain elevated or move higher, right? Because we just had a major geopolitical event which should see strong demand for gold. But actually, in fact, the opposite happened, right? We saw gold prices quickly retreating. Now, this happened because central banks were raising interest rates aggressively, led by the Federal Reserve. So the value of the dollar index was rising very rapidly. US government bond yields were also rising very rapidly. So in that environment, gold will actually pull back. So do take note of how the dollar index and bond yields are trading, or the levels that they're trading at. Because even though we did have a major geopolitical event taking place earlier in 2022, gold prices did not remain elevated, did not even go higher. In fact, they actually started pulling back very sharply. And this move was primarily led by central banks, the Federal Reserve raising interest rates aggressively, which caused bond yields to rise aggressively, and the dollar index, the value of the dollar index, to rise significantly as well. So that is why gold had pulled back very sharply from April of 2022 all the way to October of 2022. And then, as we mentioned, for dollar yen, we had the, let's just go back to the daily chart so it's easier to see. And then similarly, back in October, the Bank of Japan announced their intervention measures, right? So they started selling their foreign reserves to buy back the yen in the open market, which caused dollar yen to fall, which also caused the value of the US dollar to drop in value, which causes dollar index to fall. And also, this was the period at the second half of last year where we saw headline CPI levels for both Europe and US pulling back relatively sharply. So the combination of falling CPI at an annualized level, uh, paired with the intervention measures by the Bank of Japan, caused the dollar value of the dollar index to fall, caused bond yields to fall as well, which is what provided the tailwind for gold to rise from November all the way till end of January. Okay, so we saw a nice double bottom in the price of gold, or triple bottom in this case, right? If we look on the daily chart, triple bottom in September, October, and finally early November. And then we saw gold prices rebound strongly as dollar index dropped in value, as bond yields also started retreating uh, from their peak. So this combination of all these elements provided a very strong tailwind for the price of gold. So this is how you can use the fundamental data or data news and data points to help you to help us get an idea of the sort of environment we are in, right? The sort of macro environment that we're in, and then try and use our technical analysis to help us to structure our trades. Okay, so for gold, right, and then similarly, uh, we had a small correction in gold here as dollar index was rising and bond yields rising as well. And when we had the regional banking crisis, right? So when you have bank of fears seeping into the market, right? When you have banking crisis, everyone automatically thinks recessions. So in this case, we saw the US dollar sell off, uh, and we saw gold being serving as a good hedge against this potential banking crisis. So we saw uh, gold do a double bounce here back in end of February and then again in early March before to go finding a double bottom at about $1,800 per ounce to bounce higher, and then finally breaking the what was a previous resistance at 1960, right? This was the previous resistance. It broke through it pretty significantly, and then it found that level as a support. So you could say gold was ranging for a period of 2 to 3 weeks before finally moving higher as well. Okay, so now we see this level of 1960 or $1,960 an ounce as a significant support level. So as you can see on the Fibonacci retracement, that it also lines up with the 38.2% resistance level, and also we see a very nice horizontal overlap as well. So we saw price being rejected here back in February, acting as a relatively decent support in the second half of March, and now acting again as a support level back in support level in the middle of May. So do take note of this Fibonacci retracement levels and the strong horizontal overlap, and trying to get a sense of where the dollar index and bond yields are heading. And for gold, I think what would be pretty uh, important point to take note of also would be the debt ceiling crisis, right? The US debt ceiling crisis. if the talks break down and we don't see Republicans and Democrats coming in agreement to 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 raising the debt ceiling, then we may see a potential sell-off in the US dollar, which would then drive the price of gold higher as well. And also investors would flock into gold as a hedge against the potential government shutdown, right? So what it means is if if the Republicans and Democrats aren't able to come to terms of to an agreeable debt limit increase, it means that it could lead to a potential government shutdown, right? So maybe it'll be a case where federal workers don't get paid, many services will not run. So we will come to a situation where there's a government shutdown, and then we can expect gold to probably bounce or rebound, or sorry, not bounce, but gold to move higher in this type of scenario as investors flock to this commodity as a safe haven asset. And similarly, we could see the dollar yen pulling back as well, right? So we may see the VIX spiking, equity markets pulling back, which could also mean the dollar yen also dropping in value. Okay, we've okay, there's a question by Marcus as well. Where do you believe gold is heading within the week? I think it has bounced off pretty strongly, and uh, I think it's pretty much hinged on the fact of whether uh, the Democrats can come to consensus or come to an agreement with regards to raising the debt ceiling. If negotiations continue to break down this week, then I think it's quite likely we can see gold rebound higher from here, right? And the next intermediate support resistance level to look out for will be the big figure value of 2000. So if gold can breach through the level of 2000, it can go higher, provided that I think this would be driven mostly by the fact that uh, debt ceiling negotiations are unresolved, right? They're unresolved. They cannot come to agreement, and which is what would move gold prices higher. And do take note, if we do break past the big figure of 2000 and we head towards 2050, 2070, remember as we saw on the monthly charts, this region has served as a significant uh, resistance level. So we may see a lot of strong selling pressure around here should price reach here, come up to here on the back of falling US debt ceiling negotiations. All right. And then on the downside, there's also a nice supporting trend line for gold. We can see a nice supporting trend line here. So we are pretty much at a strong intersection between a strong horizontal support and a ascending trend line. So if this region could potentially act as a relatively strong support for gold, and if we see the negotiations continue to break down, when we see volatility index rising, equity markets pulling back, we are likely to see gold head higher. But of course, if there is a surprise agreement, right? The Democrats and the Republicans surprise the markets by quickly coming to an agreement and resolving the issue surrounding the debt ceiling. Then of course we may see the opposite happen. But as of now, all the talks, the news headlines seem to be structured around the fact that negotiations have broken down, and it seems that both sides are sort of playing hardball with each other. So I think we may see at least at the initial start of the week, we could see gold prices rising as the dollar index falls. Okay, and okay, there's also a request on US 30 and pound yen as well. So I'll quickly cover that since we are on here. We'll go to US 30 is uh, in this case on my ticker here is DJ30. So basically the Dow Jones, right? So we're looking at the Dow Jones index. So equity markets have been relatively strong, especially the tech sector. We see Nasdaq bouncing very strongly this year. S&P 500 as well, but the Dow Jones is lagging because, of course, the Dow Jones is made up of cyclicals and other non-tech components. So that is why we're not seeing the Dow Jones rebound as strongly as, for example, the Nasdaq 100, right? So if you look here, since the banking crisis was more or less resolved in the US, we saw the Nasdaq uh, rebound very strongly. We also saw the S&P 500 rebound relatively strongly as well. Okay, but because as the S&P 500 is more balanced, it's a good combination as a is sort of more evenly balanced between utilities, financials, cyclicals, and tech. So that is why the US 500 has managed to keep pace. Uh, well, not exactly keep pace, but it's sort of closer in terms of the uh, performance rebound in performance with the Nasdaq 100. But the Dow Jones DJ 30 or US 30 is a very uh, industrial and cyclical heavy index, which is why we are not seeing the strong rebound in the Dow Jones or US 30 as compared to the Nasdaq 100. Or for your instruments, it would be the US 500 or the US 100. So just do take note of the current levels that we see for uh, 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 Dow Jones. And similarly, it all hinging on the debt ceiling negotiations. It could go either way, right? We really don't know what's going on through the minds of the politicians. So when we look at the Dow Jones, similarly, if negotiations get resolved, we get a surprise resolve, we will obviously see uh, the volatility escape from the markets and we see some stability coming in, and it's likely that we can see Dow Jones probably consolidate around here and to move higher. But I think the stronger moves would be in the S&P 500 or the US 500 here, the instrument, or the Nasdaq 100, which I think would be the US 100 as well. So this is what I would think is would happen to equity indices, US equity indices, and they're primarily led by the tech sector recently. Okay, and the other one if the we had was the pound yen. So let's just quickly look at pound yen. Okay, maybe it's let me just pull up. Okay, sorry. Okay, okay, so there's a right. Okay, so pound yen. If you just zoom out a little bit, okay, there's a request. I think. And if there's anything else you just like me to have a look at, please do drop your uh, questions or yeah questions or requests in the live chat. So okay, so here on the pound yen, as we can see, uh, on this is a daily chart. So we can see we have the recent support and resistance levels are between 168.50 and 172.10. Okay, so these are the major resistance and support levels to look at. And since it broke out of this resistance at 168.50 back at the end of April, it has actually served as a relatively strong support for pound yen. And similarly, if you saw in October, the high in October, this has served as a very significant resistance level. Right, so now that we zoom in a little bit, you can see the pound yen has been ranging between these two support levels and has been respecting these levels pretty significantly. So whenever price has come around here, we can see that it has bounced off. It has okay. Obviously, it's not served as an absolute support level. We do see the long wicks down here breaking below 168.50, but generally this region has acted as a relatively strong support, not once but twice in recent times, and then price has continued to rebound to go higher towards the first resistance, where again it has run out of steam around this level. Right, so this would be indicating to us that potentially this is a potential setup for a short. As we can see, it has reacted off this price level not once but actually two times in the past. So it is likely that we may see resistance around here in price and the pound yen to pull back lower, right? And also, like I said, if the debt ceiling negotiations continue to break down, we have more volatility creeping into the markets. With the yen being a safe haven currency, we could see stronger demand for the yen versus the British pound. So it is also quite likely that if that scenario were to play out, we may see pound yen falling and drifting towards the first support. Okay, hi Darren. Okay, we have a question. Here's a question on DE40. Okay, so this is the DEX, right? I believe this is the DEX. Let's just quickly cover that. So in this case, the instrument here that is used is GER30. So this is what the instrument that you're looking for, DE40. Okay, can it go higher? Okay, I think let's just zoom out a little bit to see where we are exactly on the DEX, right? We are actually making back to all-time highs, very close to all-time highs, right? So prior to this, right, to 2010 onwards, DEX was sort of it rebounded of course after the great financial crisis, and it rebounded strongly also of course after COVID, and then it made uh, all-time highs back in November 2021, along with many other major uh, equity indices back in Europe and US as well. So it made a significant peak at all-time high, all-time high at about 16,270. And of course, we all know what happened after that. And then we had a resurgence in the European economy, where we saw PMI numbers bottom and rebound, right? We led by services. The services sector has actually been pulling up eurozone activity. Similarly, in the US, it is the services sector that is pulling up the overall economy, and manufacturing now seems to be picking up as well in the EU. So when you look at the monthly charts, we've had actually a very nice V-shaped recovery, and we are and the DEX or the DE40, sorry, is trading very is at its all-time highs, right? So of course, equity markets can go higher, they can also go lower. So let's just quickly go back into the daily time frame, right? So we're on a daily time frame. Let's just zoom out a little bit so you can see uh, DEX 40 or DE40 is in a nice up channel, right? We see a bullish channel up here, and it's also hit the first resistance of 16,290, and prices pull back from here. So I think it is quite likely in the short term we may see the DEX pulling back, especially if we see volatility in the US picking up again. So I think, unfortunately, when the US sneezes, the rest of us catch it as well. So if we see the talks breaking down, volatility index picking up in the US, we are likely to see the equity markets drop, and this would unfortunately spill over into the European and Asian markets as well. So I think just be careful with regards to the DAX 40. It is at an all-time high. We may potentially see a lot of sellers coming into the market here just to take profit. There may have been people who have been riding the leg up and seeing that it's reached an all-time high. We may see some selling pressure coming into play, and combined with the fact that uh, if uh, the US uh, politicians can't come to agreement, we may see that potentially spilling over US debt ceiling issues and a government shutdown spilling over to the rest of the other global equity markets, right? Okay, so I come to the end of today's analysis, towards the end already. So if there's any, I can probably do one or two last questions. Otherwise, let's just go back to the headline view. Yeah, just take note of the levels for the dollar index. Right, we had a big rebound in the value of the dollar index um, over the last 2 weeks, and my only concern is if it plays out to what happened in February, where we had 4 weeks of relatively strong demand for US dollars, And so this move here was driven, this recent move was driven by core inflation not falling as rapidly in the US, and with inflation expectations starting to pick up again. So these two, the combination of these two data points is what has been driving the dollar index higher. And just going to the calendar for this week. Okay, so we have, just to wrap up, we have the flash PMI readings coming in for Europe. So for look out for the big economies like Germany, France, UK, and also of course the headline EU flash readings for the services and manufacturing sectors for these countries and region. We also have the big RBNZ official cash rate announcement. So basically, the Reserve Bank of New Zealand will be announcing their cash rate on Wednesday, 24th of May. So my time is in 2, I am on 2 a.m. GMT. So take note, 2 a.m. GMT, Wednesday, 24th May. We have the Bank of New Zealand potentially raising, my consensus is for them to raise interest rates by 25 basis points to bring it up to 5.5%. Then we also have UK inflation data coming out a few hours later on that same day. And we have the Bank of England Governor Andrew Bailey speaking as well. I'm sure he would be touching on inflation concerns and monetary policy issues as well. Then we have US GDP, preliminary US GDP data coming up on May 25th. Employment claims also are a closely watched figure, weekly employment claims. So when we have strong employment claim numbers, it means that more people are filing for unemployment benefits. So that means that potentially the labor market is starting to crack, and that means this is negative for the US dollar. So hence, once you know this, if these numbers continue to come in higher than consensus and are trending higher overall, it means that unemployment claims are rising, labor market is starting to crack, and that is negative for the dollar. And the big one coming up on Friday is PCE price index. So PCE is personal consumption expenditure. This is it's an inflation price index. This index is actually one of the closely watched measure by the Federal Reserve. This is their preferred gauge of inflation actually. So do take note of the core and the headline PCE price index. As we mentioned earlier, the core CPI reading, which was announced 2 weeks ago, was not falling as quickly as the Chairman Powell and his committee members would have liked. And we are also seeing, and if this core PCE reading stays elevated, then it's quite likely we may see strong demand for the US dollar coming in again towards the end of the week. All right. Okay. Thank you everyone for tuning in. And I've come to the end of today's analysis. I hope this has been a good session for you. Right. Yeah. Just to, I mean, for those who may be joining us halfway through or towards the end, yeah, I've just been I'm covering Desmond this week as he's enjoying his holiday in Melbourne. He's just about to embark, I believe, today. So we wish him well on his holiday, well-deserved holiday. And I wish all of you a good trading week as well. So yeah, just do take note of the calendar, do take note of the levels, and especially the debt ceiling talks, because I think that uh, event is going to probably hog most of the headlines for this week. All right. Thank you everyone for tuning in, and I hope this has been a great session. Take care and have a great trading week. Thank you everyone.